Hi. Today I just want to talk to you about some of those Chinese tech stocks that is actually um, having this mounting delisting fears. Um, I think because of the Russia and Ukraine war, and China is taking a stance that is looks like they call it the no limits relationship with Russia. Um, and then looking at the sanctions that has been happening on Russia, especially financially, I think China during the 2020 and 2021 has already trying to have themselves very self-sufficient, i.e. having their own SWIFT codes for banking transactions, or having their own tech companies in case of Facebook or Google withdraw in Russia and all that. It might happen to Hong Kong if it might happen to China if China invades uh, Taiwan one day, and also having its tech companies data, which is the primary assets of e-commerce company in particular, or social media companies like Baidu or Baba and all that. So the shares has actually dropped quite a lot, as you can see. They were during the COVID period, just after it was actually at 200 over dollars. Now it has gone down to 86. If you look at Didi as well, Didi is a very famous something like Uber and Grab in like Malaysia. It's gone down like 86% since it was listed. And Baidu as well has gone down like 40 over 38 to 40%. And if you look at Neo, it's even worse. This is a 1 day chart, and if you look at their 1 year chart, 50, and now they are trading at 17. So it's a I want to do a bit of emphasis on Baba because I do know that actually for Alibaba, they have extensive business. They raise a lot of money from this um, American Depository Exchange system. They call ADR, which is listed for trading by the public. Some China company they have a dual listing in Hong Kong as well. Some don't. Baba has a dual listing. They have a Hong Kong listing as well as in US. I just want to show you that Charlie Munger, a very famous um, investor in US, a partner of Alibaba, Warren Buffett, actually doubled down on his Alibaba position.
That kind of made us perk our ears up and pay more attention to Alibaba as a business. But then, strangely, in Q2, as the stock continued to slide, Charlie didn't add to his position. Honestly, this is very strange behavior from Charlie. He's not one to stop buying a great company if it keeps getting cheaper. But those concerns were laid to rest in Q3 as Charlie added 81% to his position as the stock fell as low as $148 per share. But then we get to Q4. The stock really tanked hard in Q4. It fell to a 52-week low of $108 per share. And as we've just found out a few days ago, Charlie, sticking true to his investment strategy, has continued to buy. He just doubled his Alibaba stake. In fact, he bought 300,000 shares, taking his tally up past 600,000 shares. This position now occupies 27% of his portfolio, almost the same amount as his Wells Fargo position. So no hesitation this quarter from Charlie Munger. When one of the stocks he likes.
So you can see Charlie Munger is a very disciplined investor. He only has 5 stocks in his portfolio. Very focused, very sniper. He will defend his that 5 stocks all the time. Like he doubled down when Baba and shares actually went down. Um, but I'm not sure whether this time he is getting it right though, because the Baba continued to slide to 86, while his cost basis based on last reported in February was somewhere around 118 to 120. So what is okay? I just want to show you this thing quickly. a bank issue a sponsored ADR, what on the behalf of foreign company, the bank and the business enter into a legal arrangement. The foreign company usually pays the cost of issuing an ADR and retains control over it. So basically, they have a foreign company like Baba, for example, they form a company incorporated in Cayman Islands, and then what they will do is they will have the shares listed in the US. Like for example, they have another foreign company buying shares, let's say 10% of shares of like Alibaba in China, and then from there they will list in the American Depository Exchange in US, so the US it can become in the capital market of US stock exchange. So as you can see, China also is clamping down on foreign ownership. This could be another reason, not just on the America's part, that whereby US is US are saying that America is I mean China stocks are not actually in compliance with um, their listing requirements, because that's why the fear rises. But also on the China's part as well, to not want to have their China companies listed in US. I think now it's more like both ways. Um, because they, in case there's a war, they don't want their companies to be affected in terms of price or all that, So you can see all the US delisting surface. Friday afternoon, just yesterday, tech shares all went down. JD.com and our famous e-commerce also came down a lot. Um, so they say that there was failure to adhere to the Holding Foreign Companies Accountable Act. Like for example, US would always want to see who are the actual beneficial owner, not just the registered owner of the companies that owns Alibaba, and some of the financials and also not also the holding company of the financials of this listed entity that holds the shares. But of course, some of the shareholder of Baba, they are state-owned companies, and they could be PNC information whereby they are not comfortable to release to another country. Um, they could be work as a important financial data. So for Baba, I think it's the same for JD and Baidu as well. If they're listed in US, it means that a portion of the shares were usually in tax-free havens, like Cayman Islands and all that. And so in turn, they will do a back-to-back reissuance of shares of this special purpose vehicle for it to be listed in America. So another side news of Alibaba was could be the reason for the share drop is because they had to contribute a big amount of their cash reserves to the government, and definitely will affect their this, even though their business are doing really well with expansion in Lazada, Touch and Go, even in Turkey as well. They have a small stake in e-commerce, but they are being asked to basically I think this may not be voluntary, and then as you know, the founder of Alibaba is actually SoftBank, and I think SoftBank has sold 20 million shares, and then they will need to sell more in 2022. So this could be another thing that may not be a willing buyer, willing seller situation. It could be government that requires them to take in control of their local important industries like tech or banks or whatever, so that they are all owned by locals, Chinese state or government or Chinese individuals, and not be sold to foreign companies. Yeah, that's all for today. I'm a bit long for this video, so click a like to my channel, and I hope you like my research. Thank you very much. Feel free to comment.